Hello and welcome. It's Build Your Wealth to Trajan Wealth featuring Jeff Jr. My name is Rusty Humphries, and we sure appreciate you. Hit the subscribe button and the notification button. There's so much great information on this show every single week. I learn something every single time we do a program, and I think you will too. So make sure you subscribe, you get notified, and would you share it to somebody? I know they would appreciate it. We sure would too. Jeff, taxes. Nobody likes taxes.
That's right.
And you've started this new business, Trajan Estate. We've been talking about it for the past couple of weeks. Is there anything that planning your estate, building your trust, can that help you with taxes, or is it just you're done with taxes no matter what you do?
Well, I've said many times the 5 Ps, right? Do you remember the 5 Ps? Proper planning prevents poor performance. And the true is said with not only investments but also the estate. You know, as far as Trajan Wealth is concerned, we manage assets for maximum tax benefits. You know, and one of the worst investments that you can get into as far as taxes are concerned is mutual funds. Because mutual funds buy and sell without you as the investor knowing that they're buying and selling, and they're automatically going to generate a 1099.
So every time they buy and sell, you're getting taxed on it?
So every time you buy and sell an investment, now you have a realized gain and you're going to get taxed on it. Ooh. That's right. Okay. So by having properly structured investments, it follows suit with having a properly structured trust, which will help you avoid probate, which essentially is a lawsuit, and you're going to be paying money because of it.
And I do like the idea that that you've put this all under one umbrella. I mean, to me, I don't want to, it's tough enough I'm walking into your office because nobody wants to think about death.
Right.
And then you've got that, you're helping me make money and hopefully build up my portfolio, and then you've got a guy that's going to come in, also part of your team, that just kind of, it's a great one-stop shop. I like that. It is,
and that was really the goal of it. You know, Trajan Wealth was a full-service financial planning firm. So we do everything from retirement planning to stocks to bonds to exchange-traded funds, you name it, on the financial side. But one of the big benefits with having Trajan Estate is now we can incorporate wills and trusts and really prepare for the next stage of your life. You know, all too many firms really have to sub it out, and they sub it out to companies that they're not overly familiar with, and they don't have a say in how those assets are managed to benefit the heirs or the beneficiaries.
Well, I love the way you guys do it. I love it. By the way, TrajanWealth.com for Jeff's financial planning services, TrajanEstate.com to find out more about estate. And you've got an expert.
We do.
His name
is Kent Phelps.
Kent Phelps.
And he'd be a good one for us to actually bring in to talk a little bit about some of the tax benefits.
Yeah, let's talk about the things that the tax benefits of having a trust and estate all set up. And let's bring Kent in right now here on Build Your Wealth, Trajan Wealth, featuring Jeff Jr.
So we actually brought in Kent Phelps, who's going to talk to us a little bit about taxes on the trust side. You know, one thing I mentioned with Rusty earlier was the mutual funds. They're very, very tax inefficient. So what are some benefits of having a trust in regards to taxes?
Yeah, so basically we have income taxes and we have estate taxes. For a lot of income tax planning, trusts are tax neutral. They're not going to help you, they're not going to hurt you. But there are a couple of things to keep in mind. There are a lot of old trusts out there that some of the audience might remember. If you've done a trust, the old AB trust is what we used to call it. We still call it that. We just don't use it a whole lot anymore because the estate tax laws have changed. Well, if you have an old AB trust and you pass away, it might be structured so that mandatorily your spouse has to put at least half of the assets into a type of trust that will not get a step up in capital gains at the time of their death. What that means ultimately is that your children are going to pay a lot more in capital gains taxes than they otherwise would with an old AB trust. So the solution there is you need to have it reviewed under current law.
So how would somebody know if they have an old AB trust?
Come in and let us look at it, and we'll tell you. The client typically will not be able to tell just by reading the trust if they have it. You need to have an attorney take a look at it.
So we mentioned capital gains, and there's short-term capital gains and long-term capital gains and ordinary income, and then estate tax. What is the highest estate tax that somebody can pay? Can you put it in percentage forms?
Yeah, sure. If you're subject to the estate tax, it's about 40%.
40%. So you could lose, of your hard-earned savings and investments, you could lose 40% of your money that just just goes away to taxes.
On top of all the other taxes that we pay.
So wouldn't you say that estate tax is really a double taxation?
Yeah, absolutely.
Horrible.
Yeah,
Horrible.
yeah, it is. And so what a trust can do, but I'll just say it, many of our competitors don't do this with a living trust, is that it can actually be structured so that your bloodline for generations will never ever pay estate taxes ever again, no matter how much is in the trust. Okay? And so now if you have an estate tax problem because you're over the estate tax threshold, there's some planning that we can do. We call it advanced estate planning that we can do for you to eliminate or minimize the estate tax exposure on your death. But even a basic, I'll say, kind of living trust plan, if you have somebody who knows what they're doing drafting the trust, can actually avoid estate taxes for your children and your grandchildren and beyond. It's very powerful.
If you heard that, that's incredibly powerful. Yeah, that's right. Nobody likes paying taxes. That's right. Especially when it's a double taxation, which is completely unfair.
Yeah.
How did the Biden election change the landscape? Has there been any changes because of the political front on this?
No changes yet.
Yeah, okay.
But there are those who have the ear of our new president who want to have the estate tax exemption go back down to $1 million per person, meaning that if, as an individual, you die with an estate that is worth more than $1 million, and by the way, you need to remember to include life insurance in that calculation. A lot of people forget that. Okay, so equity in your home, life insurance, cash, investments, cars, personal all of that goes towards that. So if those advisors have their way, and the exemption goes down to $1 million, then you're looking at a 40% tax on everything over $1 million if that were to change.
Wow. And nobody will have sympathy for a millionaire. You know, if you have $1 million, you're considered rich. And just imagine saving $2 million and having $1 million of that, because it's over the threshold, paying 40%. You're paying $400,000, or your beneficiaries are paying $400,000 out.
Yeah, it's nasty.
It is nasty. Yeah. And that can be avoided with a properly structured trust. How about life insurance? You mentioned life insurance. So life insurance does account toward the estate tax?
It does. Yeah, so if life insurance is owned by you, or it's owned by, even if it's owned by your living trust, it is included in your taxable estate for estate tax purposes. Now, life insurance is income tax free, right?
Right.
But for estate tax purposes, it's actually included in your taxable estate unless you do planning. So I call the estate tax a voluntary tax. You only pay it if you don't plan. So we can accommodate life insurance and make sure it's not estate taxable.
Right, but life insurance can be used as a very good tool, if it is taxable, to help offset that tax. So your heirs don't have to come out of pocket with any new money.
Sure, it can be used for that purpose.
Yep. So how about, how does a Trajan estate and Trajan Wealth, how do we work together? Can you elaborate on that a little bit for us?
Yeah, sure. So it's sort of this integrated approach to planning, right? Is that if we're only addressing the estate planning, we're only addressing a part of what most people need. People need estate planning, they need financial planning. Well, in my experience, more often than not, if somebody's getting their estate planning done, the estate planning attorney is not talking to the client's financial advisors or tax advisors. We take an integrated approach where the tax advisor, the financial advisor, and the estate planning advisor are all talking to each other, so that the legal documents reflect the financial plan reflects the legal plan, and so forth. It's very powerful.
Very. So again, not only do we have Trajan Wealth, but we also have Trajan Estate, and it's a very powerful team that works together for your benefit. So thanks, Kent, for your time.
Thank you.
Okay. The one thing I took away from that is, you're telling me if I don't work with you guys or another group, and you don't set up a trust properly, the government can take 40% of every. Now, by the way, they've been taxing 40%. Me on everything I've been doing my whole life.
Right.
Every time I buy a stick of gum, they get a tax. Every time I get a check, they take money. And they want 40%, not 10%. You know, I go, hey, a little taste for the government. Okay, I get 40%.
40%.
They're out of their minds.
And like I mentioned, nobody has sympathy for people who have over $1 million.
No, that's true. You know, and you made a good point that people think that if you got $1 million, you're rich, but when you really think about it, not so much anymore.
Not so much. That's right. Yeah, $1 million just doesn't go as far as it used to be, obviously.
I mean, I'd like to have $1 million right now. I mean, that'd be nice, but it's not the be-all, end-all as it probably was back, a couple of generations ago.
That's right. Yeah.
And it's probably now is the best time to really get in contact with Trajan Wealth and with Trajan Estate, because we don't know what this new government is going to be doing, right? This new administration, because they really think they're really going after that 1% kind of people.
And what I'd say is, if now is not the best time, when is the best time? Is it going to take a family catastrophe? Is it going to take a death? Is it going to take the actual situation to get worse than what it is? There's no better time than now to take care of your finances. Absolutely.
No better time than now. TrajanWealth.com. That is the website. Also, TrajanEstate.com. Make sure you go and visit both of those incredible websites, a wealth of information, and a great portal to get started with getting prepared for your future. We sure appreciate you. Make sure you hit that subscribe button, would you please, the notification button, because there is new shows every single week. You don't want to forget about any of them. Share these with your friends if you would too. Until next time, thank you for being here. My name is Rusty Humphries. He's Jeff Jr., and this is Build Your Wealth with Trajan Wealth, featuring Jeff Jr.
Investment advisory services offered through Trajan Wealth, an SEC-registered investment advisor.
Services discussed are those of the law firm Trajan Estate, LLC. Engagement with Trajan Estate, LLC for services discussed are not required and is separate and not related to services provided by Trajan Wealth, LLC. Please note, Trajan Wealth, LLC does not render legal services.